Thanks for your company for the Morning Bell this Thursday, the 29th of October. I'm Jessica Amir, market analyst with Bell Direct. Well, there's just 5 days until the US election, and as history goes, the risk-off environment is continuing. Now, add in the fact that investors are questioning how fresh European lockdowns will impact the global economic recovery, and it's easy to see why global equities sharply pull back overnight. Now, it comes as Germany is preparing for a partial 1-month shutdown, while France enters a national lockdown on Friday. All this as China reported its highest ever new daily cases in over 2 months, and in the US, there's record COVID-19 hospitalizations in the Midwest. The silver lining, although the World Health Organization said last week COVID-19 cases were a record high, death rates have importantly been minimised compared to the first wave. Nevertheless, in Europe, Germany's market was down the most, 4.2%. France followed 3.4% lower, and US equities followed suit, the Dow sinking over 900 points or 3.4%. That's the Dow's biggest retreat since June, while the tech-heavy Nasdaq in the US lost the most, 3.7%, but still holds its year-to-date gain of 21%. Now, commodities mirrored equities, falling further into the red. The oil price lost 5% to $37.34 US a barrel. That's a 3-week low for oil, while the safe haven gold sank almost 2% to $1,800.77 US an ounce, really, as investors are favouring the most liquid of all liquid instruments, the US dollar, which has pushed the US dollar up about 0.5%. As for local trade today, the futures are suggesting the market will pull back 1.7% or 103 points. That's if the futures are correct. Do keep in mind, after an election result is known, many are expecting a recovery in equities. Bear in mind, over the past 40 years, in the year after a US presidential election, the Aussie share market has rallied between 6.5% and 40.24%. But 2021 could be different. Of course, a vaccine is not expected to be available widely until mid next year, so consider that. What else to watch today? Quarterly results are out for quite a lot of top 200 companies, including ANZ, Fortescue Metals, Newcrest Mining, as well as Orocobre and Janus, Henderson and IOOF. Now, speaking about ANZ's results, well, their results showed statutory profit tumbled 40% to $3.58 billion. Although that seems dire, it is important to note that that profit actually beat what the market was expecting. The market only expected profit of $3.44 billion. So keep that in mind when you're pulling apart ANZ's results. AGMs today, well, there's plenty, including Australian Ethical. Their shares have importantly outperformed the market this year, with AEF up 11%. Other AGMs today that are taking place will be for Challenger, JB Hi-Fi, Jumbo, Pinnacle Investments, as well as Reece and Reliance worldwide. Trading ideas that could be worth a look. Well, Bell Potter upgraded this family tracking app called Life 360, upgrading their buy rating, increasing their target to $7.70. Now, that implies about 93% upside in a year on the back of Life 360 improving their cash flows, and their monthly active users are now growing again. Now, importantly, Bell Potter tips 360 as the hottest tech stock to watch. Meantime, speaking about hot tech stocks, after pay, the tech stock darling was upgraded by Bell Potter, increasing its buy rating to $137. Now, that $137 target implies 33% upside in a year, and it's the most bullish target in the market, behind Morgan Stanley's 121 target. And UBS upgraded Qantas Airways, their buy rating, increasing their target for the flying kangaroo to $525, with the focus on Australian travel growth. Keep in mind, UBS thinks that as the second carrier, Virgin is now privately owned. Virgin's focus will be on profit, not on growing market share. Now, this bodes well for Qantas. Lastly, keep an eye on 3 stocks, Champion Iron, Vulcan Energy and ResMed, all showing bullish charting signals over the next 7 to 23 days, and that's according to Trading Central. I'm Jessica Amir with Bell Direct. Stay safe. Thanks for your company.